Taxation of benefits is an important topic that people always have in the back of their minds. I have yet to meet a person that loves paying taxes. Taxation of disability income insurance benefits, for whatever reason, doesn't get discussed as often in the industry. It almost slips people's minds. And yet I find it one of the main arguments as to why everyone should have their individual coverage, even if you have benefits through your employer. As I've said numerous times before, this is one type of insurance I hope you never have to use. But I can't guarantee it, and neither can you. So, are your benefits taxed? Yes and no. It depends. Let me explain. First off, if you're an employer and you offer long-term disability as part of your benefits package, kudos to you. There's a high probability that someone within your workforce will thank you at some point during their employment. If you're not offering it to your employees, note that you're missing out on offering one of the most valuable benefits after health insurance and the third most claimed benefit after health and dental insurance. I bet you never even thought about that, did you? What happens if you become disabled and start receiving benefits from your employer-paid plan? Well, first off, write them a thank you note. I don't think most people understand the level of financial stress disability causes to individuals and their families. It makes me very happy when an employer reaches out to me wanting to offer it. It's a huge help, and many more should have it as part of their benefits package. But typically, it's not enough. But you know what? It's something. And that something goes a long way when you don't have a paycheck coming in to provide to your family. According to the U.S. Department of Labor, only 33% of the private workforce have access to long-term disability benefits through their employer, which cover disabilities lasting longer than 6 months. However, when an employer pays 100% of the cost of your long-term disability, it is usually as part of an array of other benefits that sweeten the deal for you to come and produce for them daily. Good deal. I'm sure they appreciate your hard work just as much as they appreciate the tax deduction they're getting for offering and paying for the benefit. And because you're getting the tax break, you, on the other hand, get a tax hit when claiming the benefits. Whether you owe taxes or not depends on your earned income, tax bracket, deductions, etc. I suggest you consult with a tax advisor. I'm mentioning this because long-term disability income insurance is designed to replace up to 65% of your income. And if you're having to pay taxes on the benefits received, how much are you really netting? It's the main reason why financially savvy individuals purchase their disability policies individually, to fill in the gap in coverage and maximize the 65% income replacement eligibility. They know or have been educated by their insurance representatives that taxation impacts their finances. And with all the political speculation as to where taxes might be in 10 or 20 years, you get the point. Therefore, they don't mind paying a premium for a tax-free benefit on individual policies, considering they're only looking to protect the difference between what their generous employer has provided them with and what they actually need. Our associates can help you eliminate the gap that your perks from work don't cover and establish a solid financial foundation.